Reacting to goods and services tax rationalization on late Wednesday, the Indian stock markets opened higher on Thursday morning. Auto and FMCG stocks led the gains, pushing benchmark indices Nifty and Sensex almost 1% higher in the opening session. The bulls returned to the equity markets as the government's move to rationalize GST rates boosted investor sentiment. Finance Minister Nirmala Sitharaman announced that a new goods and services tax regime will come into effect from September 22, 2025 with 3 GST slabs: 5% on essentials and mass consumption items, 18% as the standard rate for most goods and services, and 40% sin tax for luxury items, alcohol and tobacco. She said that GST reforms would lead to a GST rate drop on 396 items that would help the common man, ultimately leading to a consumption boost. According to experts, the present conditions are favorable for a bull run, and any reduction in tariffs could help markets scale a new all-time high soon. Among sectors, barring metals and IT, all others traded in the green. Nifty Auto was the biggest gainer, surging more than 2%, while Nifty FMCG added over 1.5%. Auto stocks gained as much as 6% on Thursday, with M&M, Eicher Motors, TVS Motors, Bajaj Auto, and Hero MotoCorp surging the most. The sector, already struggling despite the festive season, is set for relief. Small and entry-level cars, which is below 1200cc in petrol and below 1500cc in diesel, will move from 28% to 18%, sharply reducing costs. 2- and 3-wheelers, highly price-sensitive, will benefit substantially. The FMCG basket gained as much as 5%, with Britannia, Colgate, Dabur, Emami, Nestle and HUL among the top performers. Items such as toiletries, packaged foods, beverages, bicycles and kitchenware will now attract 5% GST instead of 18%. This will significantly reduce household costs and spur broad-based consumption. Consumer durable stocks surged as high as 6%, with Bata India, Whirlpool, Century Ply, V-Guard and Blue Star in the top gainers. This came as products such as air conditioners, dishwashers and large televisions, earlier taxed at 28%, have been shifted to 18%, making them more affordable and providing a strong festive demand boost. Insurance sector stocks like Policy Bazaar, ICICI General Insurance, LIC, HDFC Life, SBI Life moved as high as 4.5%. A complete GST exemption has been announced for health and life insurance policies, reducing costs for households and boosting financial security. Nilesh Shah, Managing Director at Kotak Mutual Fund, hailed the government's goods and services tax booster, calling it a step in the right direction. Nilesh Shah in a social media post wrote that he believes it will tackle multiple problems at once, including helping offset the tariff impact from the levies of 50% imposed on India by the US President Donald Trump. While Sugandha Sachdeva, founder of SS Wealth Street, said, this GST reform holds the potential to act both as an economic catalyst by simplifying compliance, lowering costs, freeing up blocked working capital, and boosting consumption, and as a strategic buffer against global tariff shocks at a time when India's exports are under pressure.